Most people don't even know that when they put money into the bank, it's not their money anymore. It's not their money. They can't go and say, "Can I have my money?" All they have is a claim on the on that money in the bank. They have just a claim.
Ladies and gentlemen, the time flies. Welcome to Egon von Greyerz. Last month, I was already concerned what we would have to talk about next time. Events are coming thick and fast. Gold has reached new highs. The Middle East war is possible at any moment, and it can, of course, get out of control. And Ukraine also brewing. Nevertheless, Egon, great to see you.
Good to see you, Jan. Well, things always happen when you don't expect them. But I've learned one thing in my business life and in my investment life: you have to be patient. Remember that I've seen the whole trend from 1971 of 35 gold going to $850, and I've seen this whole trend which we've been in a major way from 2000 up to now, and we have to be patient because things most of the time they go sideways or correct, and then we get these big moves that we are expecting, but we don't know when, but it's happening now in a big way.
Yes, the patience paid out already, and there is much more to come, I think. We are living in dangerous times, and precautions are now, they have to be done now, including precious metals, not just, but also precious metals. And I think, Egon, we are seeing, as you just mentioned, only the beginning. And because if you hear around, people are taking profits, wow, gold is so high. In the future, that would be a big mistake if you do that right now. What do you think?
Well, you're right. This whole move is happening without any buying taking place from the investors or public. I mean, there is central bank buying, and there are BRIC countries buying, but the investment community is not buying at all. That's still, you look at ETFs or funds, they're going down still, and we ourselves haven't seen much buying. A little bit coming in now, a little bit more, but also, as you say, we've also seen profit taken, and of course, it's a major mistake, as I wrote in a recent article. The exponential phase of gold and silver rally is now starting, and this is going to move very fast and very high for quite a long time. So and it will be overbought many times and still continue. This is not a normal market now. This is an exponential market, and we will see major gains. At some point, I think from much higher levels, we will see vicious corrections, obviously even bigger in silver because it always moves faster. But the trend is going to be up for several years, in my view. So therefore, the time to get onto this trend, if you're not already in it, is now, because don't wait for corrections, because they might only happen from a much higher level. So it's an exciting time, but still, remember, we're not here for the price move. We're here for protecting wealth, and that's what the whole thing is about. We are in the most dangerous times ever in history, in my view, where we have global problems of a magnitude that the world has not seen before, both financial, economic, and geopolitical. And that's really why we should hold gold and some silver for wealth preservation purposes.
Egon, what else can I say than to completely agree with you? Today, we'd like to address one topic that concerns many people, the great taking. There is a book by a guy called Webb. The gold prices is ever increasing. Let me show quickly some charts from your recent article. We clearly took out marginal line 1 and 2, and now we are on the way or even above 2,400 or close to it. So that's clearly a very strong bull market. And as you just said, nobody is buying, or very few people are buying. That is the calm before the storm, I think, because still, as we discussed this also, the stock market still at elevated levels. There is no big fracture visible in the system yet, but that can come at any moment. So the calm before the storm.
Yes, definitely. And sadly, it will be a storm that will be very unpleasant for the world, not just for holders of equities, but the geopolitical looks very, very, very dire and difficult. And so, we have to be very careful and very, very protective of what we have.
We come to the great taking in a few moments, Egon. But one indication for me that something critical changed is the correlation between the dollar and the gold price that seems to become weaker and weaker. Let's see. That goes back until 2006 or so, and it used to be gold rising, weak dollar. We see it here, or at least gold flat, dollar increasing. But usually, if the dollar rose, gold was weak. But here already, that correlation seems not to work to that extent anymore. The euro is very weak. On the other hand, the dollar is strong, of course, and gold is rising nevertheless. I think this decoupling is also a sign that there is a strong demand for gold, no matter what the currencies are telling, right?
Well, definitely. What is more interesting, Jan, is that, okay, this is in history, this is a very short-term chart of maybe 15 years or so. But, if you look at gold historically, gold is the only money, the only currency that has survived in history. Every single other currency has gone to zero and become extinct. And therefore, it's such an easy form of protecting yourself when you know over time you can never go wrong with holding gold, because currencies are always going to go down against gold. And you show the short-term move here, dollar gold. But if you take, since 1971, all currencies have gone down 97, 99% against gold. And since 2000, they've gone down about 80% against gold. So the trend is so clear, and therefore, whatever short-term strength there is in the currency is really meaningless, because all currencies are going down, and it doesn't matter which one comes first to the bottom. There's no prize for coming first to the bottom, and therefore, one should not look at currencies as anything else but the folly of governments to print money and destroy the currency. And that's what gold is really revealing by always going up against all currencies. But sadly, governments will, of course, never tell the people that they're destroying their money and that they should really hold gold instead of a worthless paper currency. But people will discover that now in the next few years, because, as we see, I think the acceleration down of the currencies is starting now. And this is why, of course, gold measured in worthless paper money will go up significantly. But I think gold will go up by even more than purchasing power. I think gold will, in the next few years, outperform also purchasing power, because a lot of investors are going to want to hold gold, from central banks, from sovereign wealth funds, investors, funds, etc. And as we know, there isn't enough gold around. So the only way that new investors in gold can satisfy their requirement for gold is by paying more for it, because they're not going to get more weight. They're going to get less weight and have to pay more for it. That's what's going to happen. So that's why get on this gold wagon now before it's too late, because it's going to move up in a strong way. Again, only because the currencies are going to come down dramatically, and because the whole investment world are going to put more money into gold. And we know we can't produce more gold in the world. It's about a bit over 3,000 pounds from the mines coming every year. And there isn't more that can be got out of the mines. So therefore, if more people want gold, the only way they can get it is by paying more money for it, because we can't produce more. So that's an interesting situation with a squeezed supply and what is going to be a very strong demand.
Interesting, Egon, is an understatement. And I'd like to show to our audience again this graphic that shows how the interest payments of the US are getting completely out of control. This one here, Egon, we see something changed. Okay, if your debt level is where it is and the interest increases, and now we saw that the CPI and the PPI numbers came in higher than expected. So they are already afraid that there will be not much interest decrease this year. This is a completely unbearable situation. And it speaks, of course, for more gold holdings. And the dollar will also pay the price for printing that much and for the QE that we can expect from this. So the risk of a financial event increases, a black swan.
Yes, I mean, what's interesting here is that the interest payments are now looking like they could be as high as 1.6 trillion at the end of this year if interest rates don't go down, which of course as everyone has forecast. But people are now starting to question that. As you know, I have never believed that interest rates are going down at this stage. I think the trend changed in 2021. The long term, we had a 40-year decline of interest rates from 1980 to 2021. And now we're going to have a long-term trend up of interest rates, which means also of inflation. The market is not expecting that, so maybe a big surprise. But even if we have, so if there are no interest rate cuts and the US continues to spend the amount of money they are spending now, making the deficits they are making, it looks like the interest on US debt could already at the end of this year be $1.6 trillion, which means that will be the biggest expense in the US budget. And that's something that the US can't afford. And as you said, that will affect the dollar in a major way, of course. And plus, it will affect US bonds when they'll become, they'll crash. And if bonds crash, rates will go up even further. So it's a real vicious circle, this. It's not going to end well.
Yes, you definitely have to take precautions. And now let's talk about Webb, because you can also try to hedge the risk with ETFs. We told several times, rather avoid them, or with mining stocks, other equities, or maybe gold-backed bonds. There are so many offers on the market, but there is a big risk overshadowing this thing or this whole investment idea. And that's what Webb brought to light. He wrote a book recently, or he published a book recently, and it all started decades ago when collective custody of securities was introduced. You no longer have a security in your name, but you have it only as a book entry. This made the transactions easier. There are many positive arguments, but the shareholder became a so-called entitlement holder to shares against an intermediary. And he says now, Webb, that if hits the fan and such an intermediary gets in trouble or becomes insolvent, then your property, your stocks, bonds, etc., are in danger or might be lost. Let me show quickly a paragraph from the law. It's clearly said the purchaser becomes an entitlement holder. So he has a legal title to this security, but it's called an entitlement. And this entitlement can be at risk. What's your opinion about that?
Over 20 years ago, I decided that I didn't like the risk in the world. We decided also as a company. And I was extremely worried about the derivatives, which have been growing exponentially. And in my views are still a lot bigger than what the Bank of International Settlement reports of about 600 trillion. But 600 trillion is big enough. Of course, that's about six times world GDP. So that's more than the world could cope with. everything now is backed by derivatives, or everything consists of derivatives. More stock funds, ETFs, bond funds. Everything is a derivative. Very few. The instruments are very often just a very small part of that, and the rest is leveraged. And in my view, derivatives could be as high as 2 quadrillion because of the shadow banking system, etc. Not the 600 trillion that the BIS is reporting. So this is a ball of fire. This is a nuclear weapon, as Warren Buffett said. Nuclear weapon of mass destruction, this derivative matter. And basically what you're saying, nobody actually owns anything directly. It's all in indirect form. And then it's been leveraged and rehypothecated many times over. So that actually is most people end up earning nothing. And most people don't even know that when they put money into the bank, it's not their money anymore. It's not their money. They can't go and say, "Can I have my money?" All they have is a claim on that money in the bank. They have just a claim, and if the bank loses money somewhere else, your money is gone because it was never your money. The day you put it into the bank, it's not yours anymore. You're just a normal creditor to the bank. It's a very dangerous financial world, and this David Webb has, of course, highlighted this in the book, and there's a film also that you can find on YouTube. He actually happens to, I'm partly one of my home countries in Sweden, in Switzerland also. I've got 2 passports from birth, but he actually lives in Sweden now, David Webb. I haven't met him, but I'd like to meet him. Maybe I will this summer.
Interesting. And he says also, Egon, that they use your securities that you have in your bank account, which puts the bank as an intermediary between you and the security, by the way, only. And then the depository trust corporation also, or Clearstream, which again are very small, capitalized, do not have a big capital. So in case of an emergency, they have to be protected by the state, maybe by printing money. So it's all, so you can hardly keep the overview how complex this is. But let me read a little part from Webb's book. Essentially, all securities owned by the public in custodial accounts, pension plans, and investment funds are now encumbered as collateral underpinning the derivatives complex, which is so large, an order of magnitude greater than the entire global economy, that there is not enough of anything in the world to back it. That's what you just mentioned, Egon. So it's a house of cards that will for sure crumble down, which brings us to the Exeter Pyramide or the Exeter funnel. And that is very interesting, because when it comes crumbling down from top to bottom, then they will flee into gold. Here it is, credit default swaps. So we have the derivatives complex on top, and then it becomes, the more down we get, more secure. But treasury bills, okay, we will see how secure they are. But then at the bottom, we see gold. And when this complex crumbles, I think we will see, Egon, gold prices that nobody can imagine today.
That's correct, and I've been saying that for quite a while. Gold and silver also, but gold is the number one. This is the king of the metals, and gold will reach levels that no one can imagine today, as you said. So that's a fact, and that's not sensational in any way. And of course, this pyramid is, as it shows there, is inverted here, as it's shown. But of course, the bottom of this pyramid, or the foundation, more importantly, you should call it, should be gold. This whole system should rest on gold. Now it's resting on just fake instruments, whether that's fake money or fake derivatives. And derivatives, of course, is the biggest financial asset there is today, as we said, 600 trillion officially, and I think it could be in the quadrillions. And that, in my view, and I've been talking about that in many articles, I think that at some point, these derivatives will come under attack, and of course, counterparty will fail. And when counterparty fails, then the whole system will implode. In the beginning, central banks will try to print money to save the derivatives market. But you cannot, when you talk about world GDP being 100 trillion, and you talk about at least 600 trillion of derivatives, and as I said, might be in the quadrillions, they cannot print enough money, and the money they print will become worthless. But initially, it will become bank debt, and that's why bank debt will increase exponentially. But it will be meaningless because it will be totally worthless. And at some point in the next few years, that will implode, and then we'll have a real problem in the financial system. Then there'll be bank closures, and then there'll be defaults. Stock markets will crash, bond markets will crash, money will be worthless. There will be absolute catastrophe in the financial world. And sadly, as we discussed before, we have now a world where also the geopolitical side is also extremely fragile. So we're in for very dangerous times now, Jan, as we mentioned in the beginning. That's what David Webb is talking about on the financial side. And yes, I have a great fear that it is going to materialize then.
And it might materialize quicker than we think. And there is one important note, Egon. We just said if the counterparty risk pays out and the financial system is crumbling, be careful where you hold your protection. That is very important to have it outside the banking system. For instance, your gold holdings. I think that will be a key issue, something to note. Even if you have a bit higher fees now, you have to get your gold, precious metal, whatever, out of the banking system.
Yes, and this is why we created this for ourselves about almost 25 years ago, a system where you would hold your gold and silver directly outside the banking system with direct access. And now, this is 25 years ago, and still, of course, there's only 0.5% of world financial assets in gold today. So most people haven't woken up to it yet. And the problem is that when people try to get out of what they have and buy gold, first of all, a lot of people will stay in and ride the stock markets, bond markets all the way to the bottom because they will always hope for a recovery. So they won't even have any money to buy gold for. There will only be a fraction of investors who buy gold. But if world financial assets went from 0.5% into gold to 1%, 1.5%, that's more than the gold market could ever take, and it will. So that's the only type of increase that actually the gold market could satisfy, and that's still minuscule, of course. So most people will stay in what they have. They will not sell. They will sell at the bottom, that most investors do. And there will be a tremendous reduction in wealth in the world because of this implosion. And at the same time, a massive growth of debt, of course, a debt that will never be repaid.
So better get your gold now. And if you play in the stock market, who knows if Webb is completely right? There is, for instance, Martin Armstrong, who says that's all not the case. You have your stocks, and if they would take you everything like they did with the gold in the 1930s, that would be a revolution. So don't worry about that. I'm not so sure. We are living in crazy times. But if you are in the market with stocks, derivatives, be ready to jump out at any moment and rather put a larger part of your money into physical metals. A final statement, Egon?
Yes, John, we have discussed something that most people don't believe in today because investors are fully invested in stock markets, fully invested in property market, the ones with money for surplus money, um, and in bond markets, and they have woken up to what's happening, and it's very sad that all these warnings that we've given or now being given for 25 years. That still they're not reacting, but all we can say is just don't think about now, don't be greedy, don't try to just make that extra 1 or 2% in the stock market. Instead, protect your 99% by holding a real physical asset outside the financial system. That throughout history is the only money that has survived, and which will be your best insurance against what's going to happen in the next few years. And that's really what people should think about. And then, as I always say, at the end of the day, it's all about people, friends and family, etc. So take care of your family and take care of your friends, and enjoy life as long as we can.
Thank you, Egon. That was a good final statement. Again, who knows what we have to talk about next month. Stay healthy, and till then, bye-bye. Thank you.
Thanks very much. Thank you.
Thank you. Bye.